So as I mentioned, 8 out of the 24 banks rescued in 2009. We've got some banks that have been nationalized. We've got a much healthier banking sector. So overall, it seems that there's a bit of optimism, even the likes of S&P coming out and noticing.
Yeah, it's unusual to see a very positive S&P report talking about banks at the moment. So it was great news to lift the day a bit. Yeah, very much so. I think the market there has been through turbulent times over the last 2 years, but you almost can't look at it in isolation the last 2 years. If you take back over 4 years, there were over 97 banks. So the first wave of consolidation brought that down to 24 or 25, and then the Standard Bank transaction happened in 24, and then the stress that took place over the last 24 months with governance issues, with poorly capitalized banks, did weed out some of the weaker names in the market.
Well, just looking at the overall health right now, sitting at 24 banks, do you think that we are sitting in a far better scenario in Nigeria? We know that competition has always been very rife between all the banks, and it seems that this is starting to stabilize the playing field.
Certainly. There was a complete overhaul of the regulatory system by the central bank, which does govern the activity of the banks. So it largely coincided with Governor Sanusi coming in, taking a firm hand of the market, stopping some of the possible irresponsible lending activity that was happening in some of the smaller names, like some of the margin lending, some of the credit extension concentration risk to downstream oil sector, and having better regulated names.
Well, I mean, the margin lending, of course, is what really created quite a lot of the drama within the banking sector, and it was also one of the reasons that the equity market enjoyed robust gains. And this is starting to, of course, change because, again, we're starting to see a more neutral response to what we see to the equity markets. Volumes are much lower. Do you think that the regulatory environment has now completely weeded out the margin lending? Do you think that we're going to see a far more conservative banking sector in Nigeria?
Certainly the banks we engage with, we see far more conservative approach. It's far more in line with international standards, and it's probably a far more realistic volume going through the stock exchange there without the extra gearing that was coming from the margin lending. So yeah, I would say certainly the top names that we engage with, that practice is far less.
The central bank has also been quite aggressive with regards to ensuring that there is lending that is occurring on the ground. Of course, it is also talking about a lot of the risk taking that needs to go on. Do you think that is being well managed right now? Because it's a fine balance that you need to strike, of course.
Yeah, and after any period of stress, naturally all the banks would batten down the hatches and relook at all their lending practices. So you had this long period of subdued credit extension to corporates.
Diversifying loan portfolios as well, I mean, that is part of the new strategy.
That's a big part of it, and it reduces risk because it reduces the concentration on a few key names in the market which everyone had credit extension to, thereby creating systemic risk. So we're seeing banks now taking a far bigger approach, which is great for Nigeria in terms of credit extension to the middle market, the SMEs, where credit is really needed.
Absolutely. When it comes to the cost to income ratio that is also playing out in Nigeria, you've got quite a big discrepancy between some of the banks that, of course, have been very much entrenched within the country, and then you've got those that still need to expand quite rapidly. What is a fair number that you would say for the banks?
It's not a figure I've followed particularly closely, given that there's been a lot of consolidation in the market. So we need to get a true picture of the costs after all the merger costs have been taken into account. And there's very few banks that haven't had any merger activity or corporate finance activity in their book. So to get a true cost figure, I think, has been probably a bit distorted to date.
So AMCON has also done a fantastic job and nationalised a few of the mines. We're not really sure, we don't have much clarity in terms of what the fate is of these nationalised mines. What are you penciling in at this
stage? I hope you're talking about the nationalised banks.
Banks, yes, sorry, banks, I don't know what I'm saying.
The fate of the banks, I mean, AMCON is not a long-term holder of these banks, and they've made that publicly known. They are looking for buyers in the market, but it's on a very structured, prudent process. So they'll appoint an advisor, which they've RFP'd for. Once that process has gone through, then they'll solicit bids for the 3 names.
How do you foresee this now playing out? 24 banks, do you think that we're going to stop at this level? Do you think that we could actually see more consolidation within the banking sector?
I think it's natural that you would see further consolidation. If you look at a market like South Africa, like Australia, like Canada, such vast countries with huge economies, but really dominated by a 4-pillar banking system. So with 24 banks, I think there is a lot of room to consolidate still. And you're already seeing almost a 2-tier system with the top 5-6 names having a significantly more capital and significantly more profit margin business, etc., just purely because of their scale and quality.
Fantastic, Minos. We have to leave it there. Thank you so much for joining us. Great to have you on the program.